Now, just as I said yesterday, I placed an emphasis that, you know, financial statements are very crucial. You need them, you know, in this course, financial finance for managers. You need financial statements. And actually, what was interesting is that I had when I was giving you that outline, I hadn't even yet looked at the topics that you said are coming in the test, right? Yeah, but if you check the way how we did the outline, is exactly the same topics that are also coming in your test. So basically, it shows how important these topics are. And maybe for the sake of information, before I go any further, yeah. Okay, let's continue. So I was highlighting that, you know, financial statements are very important and we actually need them. And as of today, we are zeroing in and look at the pro forma specifically for the first statement, the statement of profit or loss and the other comprehensive income. Can you still hear me clearly?
Yes, I can.
The statement, you know, of profit or loss and the other comprehensive income. Now, just like any other statement, it has a title. It is supposed to have a title. There are three key elements that are supposed to be in the title of each financial statement. One, there should be the name of the business or name of the entity. Follow nicely, name of the entity. Two, there should be the name of the statement, name of the statement itself. And the three, there should be the date of the statement. So, for example, giving you an example, we can pick any name of the business. Let's say what name is this business? Whatever. Let's say Q Limited is the name of the business. Q Limited, that's the name of the company's statement. Statement of what? Statement of profit or loss. You write in full, profit or loss, and the other comprehensive income, right? For the year ended. For the year ended when? 31st December 2025. Have you followed the example? Now, are we still connected?
Yes.
So in this title, what we have put are the three key elements. There is the name of the entity, the name of the company, there is the name of the statement. The statement is the statement of profit or loss and other comprehensive income. There is also the date. It is for the year that ended 31st December 2025. Okay, that's your title for you. Now, the following is the pro forma or the format for the income statement or the profit and loss statement. It has got two columns. You can use whatever currencies that you are conversant with. If your question comes in kwacha as a currency, you can put two columns for kwachas, just like this. The statement always starts with the revenue. This is the format. Revenue or sales, it's the same thing. You write the figure in the last column like this. You're following, right? So when you are given a list of balances, right? a list of balances, the first thing that you're going to do is to look for what? For where revenue is. Look for revenue. Pick revenue. Sometimes if it is not labeled as revenue, it may be labeled as the sales. It's the same thing. Pick the sales and write the figure in the last column. That is after you have written the title of the statement. Are we good up to here?
Yes.
From there, you can less returns inwards. Returns inwards. Returns inwards is also called sales return. It is also called what? Sales return. Returns inwards, also called sales return. What is it? What that means is, look, you have made sales to some clients or to some customers, then they have decided to return the goods that you sold to them. You sell the goods to your customers, then your customers change their mind and they say, no, we are bringing back, hello? We are bringing back your goods. And so the value of those goods that they are returning to you is what we call returns inwards. The other name is the returns, sales return. Sales return. Okay, that figure, when you find it in the trial balance, please, you have to get it and put it like that, deduct it from sales revenue, and then you will have something called net what? Net sales. Your question should be, what if you don't have returns inwards? Then you can skip this part. You skip this part. You just have revenue, and then you start moving forward. Okay? For you to have net sales, it simply means that you have returns inwards. If there is no returns inwards, then there will be no net sales. From there, the next thing that you need to do is to less cost of sales. Less cost of sales. What is put under the cost of sales? Cost of sales are starting with the following. Opening inventory. Opening inventory of the finished goods. Right? The opening inventory of the finished goods. Are we connected?
Yes.
And from there, you can add the purchases. Now, the purchases are basically the goods that are bought for resale. That's how we define them from accounting. All those goods that you buy for resale, they are called the purchases. And these details, you will find them on the trial balance. Like you find these details. You just pick them, pick the figure, write the figure there. And what do you do next? You have to less the returns outwards. Returns outwards. Returns outwards. You have to less the returns outwards. What does it mean when we say you have to less the returns outwards? You know, deducting the returns outwards simply means you want to deduct those purchases that you have decided to take back to your suppliers. Remember, there could be some suppliers that supplied to you some goods, and then you say, no, I'm no longer interested in holding these goods. You want to take these goods back to the suppliers, yeah? You want to take the goods back. Okay. So now, if you want to take the goods back, then those goods that you have taken back as a company, they should be deducted from purchases. That's what we are doing.
Okay.
Then from there, you got to add carriage inwards. You add carriage inwards. And someone is asking, what is carriage inwards? Carriage inwards is basically the cost that is incurred when you're trying to bring these goods into the business. When you remember, you buy some things, you're bringing them into the company, those goods. There is a cost that you incur. Whatever cost you incur to bring them is what you call carriage inwards. And basically that is added. And once you do that, you're going to consolidate these add opening inventory plus purchases, deduct returns outwards, then add the carriage inwards. The total you find, you write down here like that. Are we good?
Yes, so meaning the first column is for adding, and then the second column is for lessing.
No, you not really. That is for lessing, because the way how these elements are, we are following the standard rules under the trial balance. Under the trial balance,
Okay.
it is said that you credit, meaning you put in the last
And
column
debit.
revenue or sales. You credit all incomes. You credit all liabilities, and you credit capital. You get the point. Those are elements that you
Okay.
credit. Then on the debit side, which is this first column, you will debit the costs, you debit expenses, all right? All expenses are debited. You also debit the costs, meaning they are put in the first column.
Okay. So for the last column where you credit, you said you credit the what?
Yeah. Hello?
Hello?
Yeah, then from there you can less closing what? Closing inventory. From this figure, you have to deduct closing inventory. Closing inventory of the finished good is what you're going to push in the last column like this of sales, and it shall be deducted from net sales if you have. All right, you deduct from net sales. Are you following that? Then you have
I couldn't get you. You're breaking.
down.
You're breaking.
Okay. Now.
So I didn't hear
Okay.
what you said after adding the carriage inwards.
Okay. Can
You're
you hear me
breaking.
now? Can you hear me
Yes.
now? So I said when you add, their total is this one, which is has the three x's, right? Yeah, down here. Then from this you are going to
Hello? Hello?
Hi.
I can't hear anything.
This is the Airtel stuff. You know, the Airtel network is really bad. The Airtel guys are failing us. Hello?
Let me log in using the other phone. Maybe.
No, you will be good. Is there any improvements now?
You're still
Hello?
breaking.
The line is still cutting.
Yes,
Now
it's
the
still
issue
breaking.
is
Let me try to log in
Yeah.
using the other line.
Oh, okay. Oh. Are we still connected? Okay. Are you here now?
Yes.
Okay, we are good. We are good to go.
Yes.
can go ahead. Yes, you can continue.
Okay. Yeah, so I said when you add the carriage inward, you have to add all these figures and deduct the sales, whatever returns outwards, which is also called purchases return. Then the figure you find are these three strikes here, right? From these, you can deduct closing inventory. Deduct the closing inventory. Once you deduct the closing inventory, the answer you find, you push in the last column. You've seen it, huh? You push this figure in the last column, and this figure shall be deducted from either net sales, that is if you have net sales, or if you don't have net sales, you can deduct it from what? From revenue on top. Because if you don't have net sales, it means you never had the returns inwards. If you never had returns inward, then there'll be no net sales down here. So you just deduct it direct from revenue. Then the figure you find, the difference is the gross profit or the gross loss. If the figure is negative, it means that's a gross loss. If the figure is positive, it's the gross profit. Are we good?
Yeah, maybe you can say that point again.
Yes, if the figure is negative that you find after doing this deduction, it means this is a gross loss. But if it is positive, then it is a gross profit.
Okay.
Yes. Yeah.
Gross. Okay.
I hope you're copying the format exactly the way how it is following. This is the standard format. You get it like this. And once you have this gross profit, gross loss, then you're good. We can now, I'll erase, then you continue writing going down you. So I'll erase on top to just create space. Maybe before I erase, I should make this strong point here. This figure is called the cost of sales. This is what you call cost of sales. All right? So what you find at some point, this same figure called cost of sales, in some other formats that are highly summarized, they just write revenue minus, they write the revenue, then they less cost of sales, like that. And then they have gross profits. You get. But on cost of sales, they don't write like this. But that doesn't really mean that this is not followed. It means they have already done all this working. Then they have just extracted this last figure, this one called cost of sales, and put it here. It will still give you the same answer. You understand? So I wanted you to understand that all this working here we are doing, this is just helping us to find this cost of sales. That's all. This figure here is what you call cost of sales. Is that clear?
Yes.
All right. Having recorded this and scored this point, then we can move now to, the gross profit. I will just continue from here. Gross profit. This gross profit down here, you've seen it, right? I've written it in blue. That last figure you find. So now from here, what do you do? What do you do? Here, you need to add the incomes. Other incomes. That's the format. Add the other what? Other incomes. Okay? What incomes? Add the other incomes. What incomes? Incomes such as interest received. You're following? The figure should be pushed in the last column. Hey, are you still connected? Oh. Hello? Your mic is off if you are saying anything.
I was saying connected. I can hear you. Sorry.
Okay. Then interest received. Then from there is rent received. You know, you record that. And most importantly, there is also reduction. The reduction in allowance for receivables. Allowance for, and you write all these in the last column. Whatever you find is called the total income. Hello?
Hello.
Yes. Yeah, so the allowance for receivables or the allowance for bad
So I
debts,
can't even see the.
you can't.
I think I'm behind. I'm still on the for in
The
the
gross profit.
incomes, the interest received. So now I can't even see the screen.
You can't see the screen.
I can't see anything. It's just loading.
I guess it's just the network from your end.
Okay, the screen now.
Okay. You are able to see the reduction in allowance for receivables. The reduction in allowance for receivables. Yeah. Are we still
This
connected?
network is just something else. Oh,
Uh,
I can't
I
see
don't
the
know.
screen. It's just loading.
I don't know because here the network is quite stable. I guess it's just from that end.
It's from
It should
my
be.
end. Ish.
What network are you using? Mm. Okay, you are now back. Hello?
Hello.
Hello, are we good? Are we connected now?
No, it's the
Not yet,
screen is just loading.
or it's not yet showing.
Oh, the door. We're networking is in the other. Ish.
You will be fine.
Recording in progress.
Okay, are you back now?
Yes, with the other line.
Or can you hear me now?
Okay. Yes, I
Okay.
can even see the screen.
Can you hear me?
Yes, I can.
And you can see the screen?
Yes.
Okay. So there is the interest received. Okay. Interests
Okay.
received. And you push this in the last column. All right.
Okay.
Then from there is rent received on the reduction in allowance for receivables. Now, the reduction in allowance for receivables, it is also called the allowance for bad debt or
Okay.
provision for bad debt. Those are other names. The provision for bad debts is a reduction in the provision for bad debts or the allowance for bad debt. So the reduction, I'll show you how to ascertain whether it's a reduction or an increase. But if
Okay.
you do the ascertainment, you find that it is a reduction. That reduction is put here as an income. Then when you do that, you can add all these to the gross profit, and you have the total income. Are we good?
Yes.
All right. We have our total income, right? We have the total income, isn't it?
Yes.
Yeah. And when you have total income, the thing is that you less from here. From the total income, you less what? What do you less? You less expenses. All right. Now we told you that the cost and the expenses are debited in the profit and loss, isn't it? So you have to put them in the first column. Expenses would include salaries and wages for the workers. Put them in this first column like this. You're following, eh? What other
Yes, I
expenses
am.
do you think you can add now? What other expenses?
Mm, I'm not sure.
Okay, you could have, there's so many expenses anyway. You can have maybe electricity, payment for electricity. Maybe if a company
Then
is renting,
rentals.
yes, that's rent. What else?
Mm,
You could have insurance, payment for insurance and rates. What else? There are quite a lot, as you're going to see when you start doing the actual questions. But at least you should just pick it in mind that all expenses are what? Are debited like this. They are put in this column. You can list all of them, including depreciation.
okay.
Depreciation is an expense as well. The depreciation for the period is an expense. We said the reduction in allowance for receivables is an income, right?
Yes.
Then an increase in allowance for receivables. The increase is not an expense. Oh, sorry, it's not an income, it's an expense.
Okay.
So that's why I told you that you have to ascertain whether the allowance for receivables increased or it didn't. Okay?
Okay.
So if you find that it increased, then you have to do what? You have to put it under expenses. If it reduced, you put it under other incomes. And then from here, you can consolidate these, add them together. Their answer is what you push in the last column like this. And that should be deducted from where? From total income.
From the total incomes. Okay.
So that you can get net profit or net loss. Net profit, if it is positive, is net profit. Okay. Loss, if it's negative, like that. So basically, that is a basic, this is a basic income statement, at least. I saw that you was the lecturer told you that in your test you need the ability to prepare basic income statements, yeah,
Yes.
basic financial statements. So this is the format for the basic one, really. So there could be few, but very few adjustments to this, if at all there are any, but very few. At least if you can have this, put it in your head, memorize it, then you are good. You should be good to go. Are we good? We are connected, right? Oh, are you still there?
Okay, yes, we are. So we are done with this one.
Yes, this one is done like that. Have you reached the net profit?
Hello?
Have you reached the net profit?
Yeah, yes, net profit or net loss.
Yeah. Then now there is a further simplified income statement. Usually you can still report it like this. This one just has one column. Then for this one, it starts with it's the same thing, though we have just further simplified it. It's revenue. You start with revenue or sales, right? Then from here, you can list cost of what?
Cost of sales. Hello?
Hello? Yes, are we still connected?
Yes.
So to find the cost of sales, I said you say opening what? Opening inventory, right? You add the purchases. You already did that in the previous class. I'm just showing you the working for the cost of sales. You less what? Returns outwards. And you add the carriage inwards, isn't it?
Yes.
When you do that, the total sum you find, and then the difference is the closing inventory. So can you less the closing inventory from this? Then the answer that you're going to find, the answer that you find is what you record here. That figure, you remember there is a figure that you used to push in the last column here. When you find it, you used to put it here and deduct it from what? From revenue, right? So this figure, this one, is what we call cost of sales. That's what you write here. You just write the final figure. That's the format I'm talking about. So for this one, you need to have done some workings somewhere. Do workings, then you're just picking the summarized figure and put it there. So in this format, it's further simplified. You don't want to show. You have a question?
So when it comes to these online exams, so we taught to come up with these balances, just type or just to write on a paper. How do they do it?
It's to be handwritten. It will be handwritten.
When doing the statement.
Like the question will come. Yes, if the question will come, then you can do handwritten. Go with your maybe plain papers. No, sorry, not really with the plain papers. There are exam scripts. There are answer booklets for the University of Zambia. So they will give you the answer booklets. They're there, and then you can you write in those answer booklets. Just go with a ruler. You draw these formats I was saying. Then you start answering in the answer book.
So even for 100% online.
Those guys that do 100% online, everything is
Nothing like
done online. Those type, They do
Okay.
typing, and usually even the way how they ask their questions, the questions are a bit different. You know, like the kind of asking.
That's the one I'm doing.
You're doing everything purely online, which means you're with the eCampus, not with the IDE, right?
Yes, yes, yes.
You're not under distance.
No. It's
Because
it's distance, but it's e
you're on
campus.
eCampus. Oh, okay, I get it. You are with the eCampus, not with the IDE.
Yes,
Ah, okay. Because with the
but it's
IDE
IDE.
guys, they come to write physics. Oh, it's under
They
Institute
just
of
introduce.
Distance.
Yes.
Okay, that's the eCampus. That's the eCampus mode of learning. So then, then the exams are as well. They'll also be online, isn't it?
Yes.
Okay. So even if the exams are going to be online, how it is done is that they can open the questions on the portal, right? Then you download, for example, the question paper. After downloading it, you write handwritten, then you scan. After scanning, there is a provision for you to submit. You still have to sit down and write. You get
Okay.
it, right? Yeah, like you can download the question paper,
So
then you sit down.
Start with the phone.
Exactly. So in that case, then if you are doing purely everything online, then you need to write using your own answer booklet. For example, your own plain papers. You will not really use the university Naniken formats. Okay. You will not really use the university booklet, answer booklet. So it is just more like I send the question paper. Hello?
Laptops. Okay.
Sorry? Come again. The line was cutting.
Yes, I can hear you now.
Yeah. So I was saying that you at that point you may not really use the answer booklets from the university, but you can provide your own answer booklets. Then you may need to write and scan your work, then you upload so that the people who are marking are able to have your exams, your work done. It's only that usually the time is really short
Okay.
and very short for you
But
guys who are
for one to
writing
start
online.
typing, you edit.
No.
Hmm.
It's usually handwritten. It's usually handwritten. Time is not there to type.
Okay.
It's
All
usually
right.
handwritten. But unless the question itself, if they want the one for typing, then they can just ask you some questions that will help you when you are solving. Like you will solve handwritten, then you just write the final answers. And that kind of
The
asking is
answers.
quite
Okay.
tedious. For example, they bring a list of the balances, then they say, can you fill in the gross profit? Then it say, find the gross profit. Just write the final answer, in the box. Final answer for the gross profit, final answer for the net profit. You understand? But you know that when you'll be working, this
Okay.
question maybe even 25 marks, so for example. You spend
Mhm.
maybe 30 minutes just to come up with the gross profit. You'll be seated working, you're just looking for the gross profit. You understand, eh? So there is that kind of
Yeah.
asking. Yeah, you can still
Mhm.
do that. So the work that you do will be a lot, but the answers you write are few. Yeah. Anyways, depending on, we'll see how they would want to ask you the questions. But the most important thing that you should focus on is gaining understanding, really. Know what to
Okay.
do. All right.
Okay.
When you're done with that, then there is the gross profit. This is the gross profit that you find, right? When you find the gross profit, from the gross profit, you can less what? Less expenses. And I've shown you for expenses, this value of expenses is that figure that I showed you in the previous format, where you add all expenses. That final figure is what you write here as for expenses. When you deduct the expenses, you will have net profit, isn't it? This is going to be net profit or profit from operations. It is usually got profit from operation or operating profit. All right, profit from operations. From this, you can deduct less finance cost or interest. This is the interest maybe on loans, all right? You can deduct that. Then you have the profit. This will be the profit before tax. You get that, eh? When you deduct the interests on loans, in case you have loans as a company, you will have profit before interest. And then if you less tax from this figure, you deduct your tax, then you have the PAT, which is the profit after tax. You get it, eh? Profit after tax. This is same as the profit of the year. Profit after tax. So this is the very simplified version of it. You've seen it, right? Extremely simplified. Yeah? Any questions? Do you have any questions? Hello?
Yeah.
Hello? Mangala,
No.
are you there? Sorry?
Hello? Can you
Yes,
hear now?
Are you there? Are you still there?
Hello?
Hello, are you still
Yes.
there? Can you hear me?
Hello? Yes, I can
Hello?
hear you.
Oh, okay. Yeah, so this is the very simplified, a more simplified version of it. All right.